All right, today we are tackling a big one, the future of the US dollar. It's the currency that shapes, well, pretty much everything. And the big question everyone's asking is,
For years, the dominant story has been all about the strong dollar, right? You feel it everywhere, from the price of stuff we import to how far your money goes on vacation. But according to a brand new report, that whole story might be about to change as we head into 2026.
so where's this all coming from? Well, our analysis today is based on the 2026 Global FX Outlook from the folks at Goldman Sachs Research. They've done a deep dive, they've crunched the numbers, and what they've found points to a pretty clear shift in the global economic winds.
Okay, so what's the big headline? Well, the first thing you need to know is this isn't some doomsday prediction. We are not talking about a dramatic crash or a sudden collapse. No, they're forecasting something much more gradual.
And the key phrase they use is a shallow dollar descent. Think about it this way. They expect the dollar to weaken, sure, but it's more like a gentle, easy ski slope, not some terrifyingly steep cliff. It's a story of moderation, not mayhem. That's really the key.
What's really fascinating is when you put this into historical context. Just look at this chart. You can see these big peaks for the dollar back in 85, '02, and again more recently in 22. And you see the pattern? There's this sharp spike, then a quick adjustment down, and then a much slower, more gradual decline. The forecast for 2026, well, it suggests we're just following that same historical playbook.
Okay, so that's the what. But what about the why? Why is this gentle decline happening? Well, it's not just one thing. It's more like a complex economic tug-of-war, with different forces pulling in opposite directions. To really get it, we need to talk about this really cool concept analysts use called the dollar smile. Seriously, just picture a smiley face. The dollar gets super strong at the two high points of the smile. That happens when either the US economy is just crushing it, way ahead of everyone else, or when there's a big global crisis and everyone rushes to the safety of the US dollar. But where is it weakest? Right in the middle, the trough of the smile. That's when growth is, well, just kind of moderate and balanced across the globe.
And wouldn't you know it, this chart shows exactly where the US economy is expected to be. Yep, smack dab in that middle trough. After a period of outperformance, the forecast is for more balanced global growth. And if you believe the smile theory, that is the perfect recipe for a less powerful dollar. So this is that tug-of-war I was talking about. On one side, you've got sturdy global growth and the fact that the dollar's already really strong, and those things are trying to pull it down. But on the other side of the rope, Goldman's own forecast says the US economy is actually surprisingly resilient. And that acts like a safety net, putting a floor under the dollar so it doesn't fall too far, too fast.
Okay, so if the dollar is taking a little bit of a step back, who's stepping forward? Let's start by heading across the Atlantic over to Europe. The report points out that the euro had a fantastic 2025. It got a lot stronger against the dollar, and because of that, it's now trading much closer to what analysts call its fair value. The exchange rate that the underlying economic conditions would suggest.
And you can see it right here on the chart. That gap between the actual exchange rate and its estimated fair value line, it's really closed up. So what does that mean? It means the euro is on solid ground for sure, but it's probably not going to be the star player driving dollar weakness this year. You could say the easy gains are already in the rearview mirror.
All right, let's shift gears completely and talk about China's currency, the renminbi, or the yuan. This is a whole different ballgame.
In stark contrast to the euro, which is pretty close to its fair price, Goldman Sachs finds that the yuan is a whole other story. They describe it as one of the most deeply undervalued currencies out there. Basically, it's exceptionally competitive on the global stage.
And this slide, wow, it just lays it all out. Look at that massive gap between where the currency is currently trading and where their model says it should be. That is a huge undervaluation. It creates this potential for a pretty significant appreciation, not just in 2026, but maybe over the coming decade.
But, and there's always a but, right? The big questions are how far does it go and how fast does it get there? On one hand, strong exports and that deep undervaluation are arguing for a stronger yuan. But the report pumps the brakes a bit. It points to things like weak domestic demand inside China and the government's really tight management of the currency. All that suggests a gradual appreciation is far more likely than some sudden dramatic shift.
So let's put all these pieces together. What does this all mean for the whole global currency landscape? Let's zoom out and look at the actual numbers. Here are Goldman's specific 12-month forecasts. You can see the trend clearly across the board.
the euro is expected to strengthen, and the dollar is forecast to weaken against both the Japanese yen and the Chinese yuan. It's a picture of modest but broad-based dollar depreciation.
And I love this phrase from the report because it just captures the essence of the forecast perfectly. More cycling than frightening. It means, yeah, expect shifts, expect cycles, but don't expect a disorderly collapse of the dollar. It's all about adjustment, not apocalypse.
This brings us to the final, crucial question, the elephant in the room. If the dollar's value is slowly declining, does that mean its central role in the global financial system is also coming to an end?
And the report leaves us with this powerful and really important thought. It's crucial to distinguish between dollar depreciation, that's its value going down, and dollar dominance, its central role in global finance. A currency can weaken in value without losing its status as the world's primary reserve and trade currency. And understanding that distinction, well, that's going to be absolutely key to navigating the global markets in the years